But it looks like we're seeing a bit of risk appetite coming back into the market. We've got the rand back below 7.60 against the dollar, the euro above 126.50, and it appears that risk is back on the table for the moment.
Well, a very, very choppy market that we've seen the last few days, and I guess everybody really caught by surprise on the 300-point move on the Dow, plus minus 300 points on the Dow last night, and S&P moving in a similar fashion percentage-wise, and that's caught a lot of players by surprise, and what we've seen is the rand strengthening on the back of that.
What have you seen as the main reasons for that big improvement in the Dow last night? Because, of course, we did have that announcement coming out of State Street that earnings are going to be better than expected. Is that the sole factor, or do you think that these markets just have been oversold?
I guess sentiment was so bad last week, Stephen, that I guess there was a certain amount of oversold positions out there. But you know, it's very hard for me to buy into the earnings growth story, because you know, where's the consumption coming from? Where's the buying power coming from when unemployment is still such a big problem? So when I take a step back, I guess a lot of guys were stopped out. That was a really big run to the top side. And it does smack a little bit of panic and perhaps a bit of stop-loss buying.
And of course, State Street, just one of 500 companies in the S&P 500 who are going to be reporting back. We've got those results starting to come through from next week with Alcoa on Monday. Do you think we're going to see the markets continue to remain quite volatile while these earnings start to come through?
Yeah, I think there's a fair degree of volatility in the system at the moment, Stephen. Very, very conflicting pictures. You know, we've got that bullish note coming out about earnings. I'm not sure that was the only reason that the equities ran up. But in the background, you've got all this uncertainty about global growth. Only earlier this week we had noted economists talking about the housing bubble in China, perhaps. European problems certainly haven't gone away, and we've still got a massive global unemployment problem.
But at the same time, we had the International Monetary Fund coming out and upgrading its growth expectations for the world from 4.2% to 4.6%. And of course, as you say, this really does go against what we have seen coming out economic-wise over the past couple of weeks. Of course, Asia playing a large part in that growth, though.
Yeah, I mean, that's what we're seeing. We're seeing the Far East and certainly Asia fueling global growth. But you know, there's a lot of concerns around that growth scenario, particularly about housing bubbles potentially forming in China. You know, we had there's some serious growth that's come through in the property sector in China, and a lot of people are expecting in the second half that market to slow quite dramatically, which might put pressure on some banks. So a lot of uncertainty in the market at the moment, and I certainly don't think that's creating a bullish picture for global growth in the second half of 2010.
Of course, also key for the markets are those European Union stress tests that are due to be released later this month. We've seen the euro strengthening quite significantly against the dollar over the past couple of sessions. Do you think it's on the back of expectations that these stress tests are going to come out positive?
Well, I think it's a similar scenario to what we had, perhaps, you know, liken it to yesterday's equity market bounce. A lot of short positions out there, and when the focus shifted away from Europe and to potential woes coming out of the US, then we saw the euro jumping, doing what it's done over the last couple of weeks. I'm not sure it's a reaction to potential results out of the stress test, because there's still a lot of uncertainty about how far those stress tests go. And what exactly what they are measuring. Are they measuring simple haircuts as far as bond prices are concerned? Do they take into account a potential sovereign default? So there's still a lot of question marks around that, and of course that's also adding to the uncertainty in the market at the moment.
Well, perhaps bringing the growth picture closer to home, we had the Reserve Bank Governor Jill Marcus speaking yesterday, and seems quite cautious about prospects for growth at this stage given what's going down in Europe. Still expects about 3% growth for the South African economy, inflation to start ticking up in the fourth quarter of the year. We had bond yields improving yesterday. Do you think the markets are taking this as a dovish comment from the governor, and that the fact that we could see another interest rate cut either at this meeting or the September meeting?
I think that my reading into the governor's comments yesterday was she was extremely dovish, really cautious around growth. And of course, one of the things that we need to bear in mind is that we are so closely linked to the global economy that anything that happens over the water somewhere is going to have an impact. And of course, underpinning this whole issue is our own unemployment problem, a massive unemployment problem that might in fact lead to social unrest going forward. There's a potential, I think, that certainly I'm moving towards a stance that we may see an interest rate cut, if not in July. If the scenario continues to play itself out as we're seeing, then certainly at the next MPC meeting.
Of course, we have the Bank of England and the ECB announcing their interest rate decisions this afternoon. Any surprises expected from them?
No, I don't think so. I don't think any one of them would want to create any shocks in the system. If the ECB cuts rates, that will certainly be an acknowledgement that there's serious problems there. And I think both for the BOE and ECB, we'll see a steady as she goes stance.